A very bearish close for the August monthly candle. You can see here we sold off a ton from highs around 430 plus on SPY. If you remember, everyone was super bullish when we're getting up here. However, I was very cautious about that and even took a short position near the highs that we had during this big upward move right here. That is paying off very well right now. However, things don't just fall straight off a cliff unless you have a crash like COVID back in 2020, but I'm not expecting something like that. However, there are a lot of back and forth moves that are tradable as we kind of go down and chop within this range for right now after having such a bearish candle for August. First thing I want to talk about today in this video is this orange line here. I reference this a ton. Just very quickly for you guys to see if you are not familiar with the channel, which by the way, if you aren't, subscribe below, it is free. This line predicted the COVID crash in 2020 and also the 2018 correction. And it goes all the way back, you can see here, to 2009 at the low. So you can see it right on this time of 2009 at the low for the level here for SPY. And if you drag it across, it acted as a very key resistance all the way across time here. And now we are flirting with it yet again, which is many times this year so far. However, this has acted as a very key support, as you can see over here, as well as resistance, as you can see over here on these two times. So right now we are actually below this line on the daily candle, which is very key, because if you just were to take a tactical standpoint and look at this chart without thinking about anything else, this would be bearish, the fact that we've closed below here. However, the week is not done yet, and I care more about how the weekly candle closes, especially also where the gaps are. So for right now, we are under on the weekly. However, I want to see what happens once we get closer to the end of this week to see if we're able to pick up back above it, because this can be a very good catalyst for some form of a relief bounce after all of this downward pressure we've had for the past 3 weeks. So as always, the market is about probabilities, and just because I think there may be some form of a short-term relief bounce doesn't mean it has to happen. And there's also an inverse pattern that we could see right here, which I'm about to show you in SPX, that actually has us going all the way down to around 3,910, roughly 3,920. That is the bottom of this wedge here on the 15-minute chart. You can see that I dragged it across the pivot from back here, as well as this key pivot up here where I predicted the fake gap fill that we had before falling lower. That was back last week, if you watched the video on Wednesday. So we did fall off of that after Jackson Hole meeting, and now we're all the way down around 3,955 for the close, and that is right on this top of the wedge right here. So again, there are two scenarios. One is we have a gap up kind of and run, whether that be tomorrow, the following day on Friday, or at the latest would be Monday. Or the third one would be a potential, we fall down around 3,910 to 20, and then we kind of reevaluate and see if that support is able to hold down here before going up, or if this thing's just going to continue to keep falling, because as always, that is still something that is possible. Now, do I have a higher probability for the upside? Yes, I'd say that. However, you just have to be careful with it, because there always is a risk in the market, and you need to understand your risk before you can even understand your reward, because everything's about risk. This is why companies put in like hundreds of millions of dollars just to be able to minimize their risk, help speed up the order flow process and everything. Another thing I do want to talk about today was actually the VIX. You can see here we were red on the VIX, which was negative 1.30%. However, if we go back to SPX, we were negative 78 or 0.78%. That is very odd that we had a red day on the SPX and also a very red day on the VIX too. That is characteristic of a potential where we fall down. Plus, if you guys already noticed here by just looking at this chart, what do you see right now on the 15-minute chart just looking at this section right here? And I'm assuming if you have been watching our videos for a while, you know that this is a head and shoulders on the 15-minute chart for VIX. Now, VIX is a bit harder to chart, not the same as charting like SPX, NASDAQ, or just individual tickers. However, this is a head and shoulders pattern unless it had some form of a gap up after a big gap down on SPX tomorrow. I do see this potentially falling at least lower to around this pivot of 2450 roughly. So as of now, the VIX does look relatively bearish. We'll see how it goes tomorrow. Remember, gaps can totally mess this up by tomorrow, especially if it gaps up, because this would just be a fake pattern here. But for the most part, this is a head and shoulders right there, something to note. And then also along with SPX, like I shared with you, we are in this wedge right now. It's just a question of if we're ready to break out of the wedge yet, or if we still have a little bit lower to go before breaking up out of that. Another thing I do want to talk about in this video today is the put flow in the month of August. I filtered this for, well, first of all, I did it from August 1st all the way to August 31st. And if you filter it for over 2 million in premium on the Cheddar Flow application, you get this that shows up here. This is pretty incredible, to be honest. Just scrolling through this, look at the premium. I want you to specifically look at the premium right here. You could see under the premium tab. And then also I want you to look at the strike and see how far out the money the strikes are, as well as how much premium we're looking at. And as I scroll down, you look at some of these, it's just incredible. This right here, we have 17 million plus of orders just between these two. They came in for 1021. That's relatively close expiration. We keep seeing something like this. 16 million right here. We have 3.1 million, 7.1 million, 7.5 million. A ton of these. All the highlighted ones are above the ask. If you look in our order details, you can see right here it is above the ask. And even just ones that aren't above the ask are still pretty incredible, like these 402, 1021 for the 2.4 million in premium. And it's just consistently hitting the tape throughout the entire month. Very, very little amounts of calls. And these were like super deep in the money, so nothing crazy there either. So pretty incredible that we've seen all of these prints throughout the month of August. And it's no surprise that August candle, the monthly candle right here, if we go over to the monthly chart, was this bearish after seeing all of these puts hit the tape. And if you remember, in July, we did see, not to the extent of the amount of puts we saw in August, but we did see a lot of these puts hit the tape, and they probably were getting squeezed out or preparing for this month of August for this big pullback, because in retrospect, for people, especially if you were bullish during this month of July, you see now that this was just exit liquidity that they were using to dump on you, because now we have fallen quite a bit off of that. So this is a very, very bearish monthly candle. Monthly candles can be a bit iffy to determine the next month. However, a candle like this, just from a chart perspective, means we will see new lows in September at some point, whether that is going to happen relatively soon within the first week or later on. But this is a very bearish monthly candle, so you do have to watch out for that, especially if you're just overly bullish. It's never good to be overly bullish or bearish, because you can get squeezed out in either direction. So you just need to be careful of that. But very interesting to see this. And then also dark pool levels. I want to talk about this. Today we saw 1.3 billion at the 398 level. Nothing too insane. However, if we go back to previous days like Tuesday, we can see here we saw 2.6 billion. Okay, that's definitely decent. Over 2.5 billion, a decent amount. Now I want to see some 3 billions as well, because that shows us a little bit more. We saw 1.9 billion on Monday, so again, decent amount of them. But then if we go to Friday, you can see here we got our 3 billion print. So dark pools are picking up right now in terms of signature prints. This isn't the characteristic, just maybe you get a billion in one day and then the following day you'll see just like 700 million or so. We're seeing consistent over 1.5 billion, over 2 billion in premium every single day now around the, well, we were a bit closer to higher levels. You can see here, look at how perfect this is just on the mini chart. This is the main level, 419.34, which is the purple line. We dumped straight off of this. They sold right at the high of this move, kind of like this mini relief rally, and then just fell straight off of that. So really precision with this order that the institutions had here for signature prints, and pretty incredible that they were able to nail that to the downside. But we've seen a lot of these prints characteristically on the way down, so just continue to watch these in the future to get a sense on where the market can go. And then last thing I want to talk about here is this channel we have going on. So you can see the top line right here, which we rejected beautifully right off of this. You can't even script how beautiful it was right off of this line. And then also we have the support level, well, two of them that I have on here for the trend lines that are at the bottom of this range. So in terms of just a technical standpoint, we got rejected off of this level, and now we are en route to eventually hitting this level, but it doesn't have to go straight down into that. You have to remember that. You can't just blindly short, especially when we're in the mid-range, because you can have stuff like relief rallies, relief bounces of sorts before continuing lower. It doesn't have to fall straight down. We saw it all the way back here when we were falling down. We saw two big pop-up days. This was a major green candle up here. There was OPEX in May, and this could have scared a lot of people that were short, and they could have gotten out before it resumed lower. So be careful of that at the very least. You don't have to be super precise with anything, but it never hurts to take profits if you were short with me when we were a lot higher up, because again, nothing wrong with having profits, but just be mindful of that as we continue down right here, especially around key demand levels that I have been seeing so far. And last thing I want to talk about here is Apple. This chart right now, we had the major break to the upside. If you remember me talking about it all the way back in 137 and 138, I only expected us to get to like 150, at least for that move. I couldn't predict this far in advance to see it go all the way up to 176, but we did get our 150s, and then it continued higher and higher and kept going up. And now we are retesting this bottom of the channel that I have right here. If I go back to to the chart, you can see this is the support of the channel and this is the resistance of the channel. Rejected perfectly off the resistance here, and also was rejected perfectly off this resistance. There's not just one way to chart things, guys. You can chart in multiple different ways. I had this chart and also this chart and another one that I have too, and all of them had a resistance around this level, or at least this range, and they all got rejected right off of this, or Apple got rejected right off of all of those charts, resistances here. So now we're on this key support level. And if this support does break decisively, especially with like a weekly close and continues lower, this thing has a lot of room to continue going down because this would be very bearish. But again, this is a demand level because of how it has acted as a support and also resistance. You can see right here in the past. So you just have to be careful, especially if you are short around this range, especially with also SPY, what I showed you earlier with that line. This is another key line, and it's funny how this is converging at the same exact time as we are touching that SPY line. The market likes to work with a lot of convergences, and when you know how to chart correctly, you understand that all of these are kind of like the market's all aligned in one. It breathes in one way, if that makes any sense. So just watch this, watch these levels that I shared with you today. Very exciting times in the market, but you have to be super careful trading. It's going to get very difficult, like I shared with you in the last video, and you've probably already noticed yourself. It has gotten a bit more difficult, especially to start off this week. So I wish you the best, and I'll see you guys in the next video.